very often on a $300 stock, but we actually got all the losses back. I think, just my opinion, I think the Boeing low could be in. Your thoughts, Joel?
Yeah, it was, I think the whole world was waiting for 320. And
it got there, and whoever's selling it there is not listening to the pre-market prep show, because that was the level that we were talking about that needed to hold. It held. It held. So I was impressive. On really bad news, they held that level and then tried to close green. I think at least the short-term low is in. Again, if you are trading this and you're calling a bottom, you start going like 318, 317. Okay, the theory is out the window. The low isn't in, and we got to get out. But if you were to buy today, you risk yourself, $10 or whatever. I can't argue with you.
I think what you need to see here is get away from it a little bit, right? Like you hit it yesterday and you bounced. Last time that you came down to this area, boom, you were back at 340, 350 in the next couple days. When you hit it in August, you had that big old rally up to 390. So this is interesting. I mean, it's a great technical level. I'm not disagreeing with you on this, but it needs to get away from here. It needs to distance itself, or it's going to be kaplooey. I agree with you. I'm just saying the last couple times that it came down to this area, it really bolted out of it. And it had a good day yesterday, bouncing off it. But, man, it's got to get away from this area. You're going to start getting some nervous Nellies. Wow, 327 unchanged on the session after all that movement.
Impressive. Most impressive. If you were short, Joel, and you saw that trading action yesterday, would you not be a little bit nervous?
And you know what? And if I had a big short and I was real confident, I would have been standing there
nervous.
at 320, and I'd be like, wait a second. I'm not getting filled. Then you would have had to chase it on the upswing. I'm not going to fade you on it. It was impressive move.
Huge level.
Shorts were
so
looking
impressive.
For
I'm so impressive that level held yesterday. I'm very impressed. Impressive. Did I say I'm impressed?
You are very, very impressed.
Okay, so moving right along. So that's our Boeing thoughts. I guess we're going to have big level Wednesday here because there are some huge levels in a lot of stocks. I'm going to talk Merck. Merck 90. Big seller perched up there. I guess I should open my book for all this, but I know I've been watching that seller. Look at those two highs. They went up there. Don't tell me these levels don't come into play when there's a big seller in the book. Because look at the highs, 89.96 on December the 12th, 89.99. You can say, oh, it's psychological, but it wasn't even psychological. It was book. Huge seller at 90 in Merck, and that seller is holding up. It takes a lot of money to get through there. If I go and actually open my book, you can talk about it for a second. I will go and open my book up. I can give you the exact amount.
Are we having problems, Spencer? Did we get booted off air?
We had a YouTube stream hiccup. We are back now.
What's going on with YouTube?
We have problems here. Sorry, Gremlins. We went on for a year, it seemed like, without Gremlins, and the Gremlins have showed up, and they are angry. So what did we not hear? Where did we lose it?
I'll tell you exactly when we lost. We
lost a lot of cool content. Me and Joel were giving our top secrets away.
We lost right when we were going into Boeing. But
so I didn't hear anything about Boeing.
But we came back in the Boeing discussion. So.
I'm just saying it was 320 was huge in Boeing. It held. I'm impressed with that. I think the low is in Boeing.
And I didn't disagree with Dennis. I just said that the last few times we came down under this area, we roared right out of it. Boom. In August, you hit 320.41. 2 days later, you closed over 330, 330.45, and then it was on its way to 390. When you went here again, you hit 224.40. That day, you closed at 337. Got up a high, but not as high. Got up to 376. So I'm just saying, hey, this is the third time down. Stock has to close. Doesn't have to. Can do whatever I want. Needs to get over 330 because all the people that are looking, they bought it at 24, 23, 22, and 21. Want to see this thing at 340, 350. That's the only
If it hangs out here for too long, I agree. Then whenever it hangs out, whenever a stock hangs out a level for too long, eventually it usually takes it out. So you always want to see them move away from it. And this was going to be the segue into big level Wednesday here, where we talked Home Depot, the 320 was huge. I want to give you like 3 or 4 numbers
Let's
on
go.
some
I got a
stocks
couple
here
for you
that are
too.
just huge. So Merck, $90. There's been a big seller in the book that's been perched there. We talked about it a week and a half ago when the stock was just approaching it. It held 89.96, the high on the 12th, and then 89.99, the high on the 16th. Those aren't coincidental. It's just the big seller, and there wasn't enough money to take that big seller out. So now it starts to come back down a little bit. So Merck 90, huge. Johnson & Johnson 145. JV Spec alerted us to that seller there a couple of days ago in the chat as it approaches it. It could come into play today. You're getting a little bit of a running start at it. You had some positive commentary. Tim Seymour's pick of the night on Fast Money last night. 143.96 is where it's trading the pre-market. I would expect to have some major resistance at 145 the first time up there. So sometimes, the way I like to play it, I don't like to get like 144.99. You get so close to within the penny or two, sometimes it takes it out. I usually like to short them in the 80s, a little bit ahead of it. So say like 144.85, I might try it. Starts to get close to the 145, I'll get nervous and cover. But 145 is a big number there on Johnson & Johnson, simply because there's a huge seller in the book perched there. I don't have a book for this one, but I've just got to point out the level because it's huge. I do own this stock in my long-term portfolio. It's iRobot. I bought more almost at the low. It was a good buy. So my first buy was bad. The second one I averaged in, like Joel says, never frown, average down. iRobot was $42. I think I bought some at 43.5, so, or 44.
Nice.
And I actually bought 3 times more. So I brought my cost basis way the hell down. Anyways, $50. Look at this level, Joel. Look at these highs. Just kind of nesting into the perfect little Jeff Mackey purple crayon up, bumping its head right against that 50. That's the big level. iRobot, for it to continue the run, needs to take out the 50. Takes out the 50, I think it could go to 55, but 50 is important here for IRBT.
Yeah.
That's a lot of levels.
Yeah, there is. Yeah, and you're starting to show a little bit of a green candle here for the month of December, so that's good for iRobot. One level I wanted to mention, and it was taken out yesterday, but it didn't close above it. AMD at 43. They knocked that boy out of there, or girl. 42.95, 42.98. Yesterday you snuck to 43.11. So all the 43 buyers, we're looking good. We go up to 10 bid at 11. Boom, back down. Do sellers
the chips
reloaded?
Are so hot.
Yeah.
I mean, Nvidia too. I own this in the long-term portfolio. Kramer was arguing last night. He had the Broden numbers there. Carolyn Broden. We've never had on the show.
We did. I tried.
She won't come on her show? Oh, he's probably married to Mad Money. Some of these have exclusives, and she's mentioned on Mad Money all the time. I bet you they got an exclusive with her. Is that it?
I'm not sure.
Try again. Carolyn's good. Anyways,
if I send someone an email and they don't return my email, I don't.
And you don't email again.
No.
I mean, it was kind of a they're just she was arguing with the fibs, and she wasn't on it. It was Kramer arguing her point. But he gave some huge price targets on 3 stocks. Shopify they were saying this could go, I forget, it was like almost like $500, which I've been arguing it too. Nvidia, I think they said like 338, like the fibs were, looking. They were looking at the different fibs, and I don't. When you start going into the fib extensions, I don't
either
follow it.
I don't know.
So we always like the 50% retracement. I'm not a big fan of looking at the extensions. I don't really believe it, to be honest with you. But it was, still promoted last night by Jim Cramer. And that's why Nvidia is trading up $1 here this morning. It started ripping as soon as they said 338. So this is a little Cramer pop here for Nvidia. And Shopify had the same thing. PayPal was another one that they gave a big target. I think it was like 127 on PayPal. It was really Nvidia that jumped out at me, though. Like when they started talking about the 3. So Nvidia was trading down when they started that piece. It was trading at 228 because the SPY was slightly down last night. They started just buying the offer. And by the time the piece was done, the thing was up at 228.75. It rallied almost 75 cents because they threw out I think it was 338 price target on Nvidia. That was right from Kramer's, just saying on these fibs, if these extensions work, that's where Nvidia could go. I'm still a fan of Nvidia. I still have it in the long-term portfolio. I don't know if it's going to 338, but I'll tell you it's up $1 because of that. And the chips are hot.
Let me just take a look at that. Climbing back up, probably well through the 50% retracement. You're just working into those big red candles.
Original move.
Yeah, Yeah, just, go, you could probably go and dig some daily highs up from late in 2018 and find some levels for it to go. A couple questions here. Don't look now, but my Peloton's getting delivered today, and look at the stock, Triple D.
We talked about it yesterday. We set a trade up for you yesterday on this. The 4 lows became the 5 lows. I said, if you could get this in the 30s, I like the setup here, that stopping out at the 29.86 low. We set this trade up for you yesterday on the show, and it would have worked, at least so far, because the stock now rallied $2 from where we were talking about it. So I wish I would have played it. I did not. A lot of times we set up these trades and I move on and I don't get back to it. You know how I like to do my stat arb stuff. That isn't a stat arb trade. That's a flat out call. But it was a good call by us on the show. We like those lows, and that's what it is. It's all about, finding a level. There seemed to be a buyer at 30. So now we have a level we can lean on. And, if you would have got it yesterday, when we were talking about it was 31.10, I think, in the pre-market. I said, if you can get this 31 or a little bit, maybe in the 30 handle, you could take a shot, stopping at the 29.86 low. The risk reward was set up there, and it would have worked. And I'm still saying Peloton, I think the run is not over here yet. I don't believe in the long term. I'm with you, Andrew, left in the long term thesis here. But in the short term, I think this is going to be a great Christmas season for PTON. And I would not be surprised if it still makes new highs.
The question was for a continuation move here. Well, first, we're up in the pre-market at $33. You closed at $32.93. 33.32. That's yesterday's high. Now, there's not much in there, right? There's only a single high there, so I don't like to put a lot of significance in just one daily high. But what I like about this area is you had that big rally up, 37.02, right? Boom, you took it down little over $7. Took it down under 30. Boom, 350%. That comes in at 33.50. So that's getting back half of the break. It's not a, it's not a 2-star, it's not a 3-star, but it's a level that's going to tell you whether or not this break from 37 to 30 was just a little warm up for the bigger party to take it to 40, or is this just a bounce? People that didn't sell into the onslaught are there. Oh, I'm going to wait for the 50% bounce here. So 33.50, love to see a close over that. And I believe my Peloton's getting delivered sometime today.
You'll have to let us know how it goes.
Yep, I might bring the shoes in.
Dr. J asking us about Bristol Myers levels. I can give you the clear level. BMY sitting at 65 in the New York book, 88,000 shares for sale. And, I get this all the time. They're like, there's the levels, it all moves around. If you look at the book intraday, I agree. It's all envelope orders that kind of move around. When you look at it in the pre-market, you kind of get a feel for where the real liquidity is. Because you know what? The high frequency traders aren't throwing orders out here an hour before the open. They're not, sitting out here enveloping, maybe in the pre-market, but not on the New York book. It's not even open yet. So these usually are orders that are solid. They're probably real. You never know if an order is real or not. They're not going to cancel. But, you get these levels. It's just predictable that, you look at the chart and think, what's at 65? I see a high at 64.75. I see a high yesterday at 64.55. I'm like, what's at 65? Oh, lo and behold, 88,000 shares. Well, the quick math on that says it takes a lot of money to go through 65. 88,000 times 65. That's a lot of money. So it's not surprising that this would stall out in the 64 handle. Takes out 65, then you go further into the book and you start thinking, okay, well, 66 is not much there. 67 has 58,000 shares. So it takes out 55, then there's room to 67. We're not looking at charts, we're looking at the book. The book gets ahead of the technicals a lot of times.
And just for that AMD too, remember that 34 level, 34 and a half, seems like ions ago. Man, that held up. I'm kind of looking at this 43 as a new 34. Is it going to hold? Is it going to be a top? We'll see. Probably a lot of it dependent market action, but no, good. The institutional orders that are there, they stick them there and eventually get done.
And I can tell you something else, institutional orders, there's some seller here in Bristol Myers here this morning as well, because I've got 161,000 shares to sell in Bristol Myers. That is very significant. That is why the stock is trading. So if you scramble around looking for news on why Bristol Myers is trading down 24 cents in the pre-market, you don't have to look any further than the big selling balance. 160,000 to sell is significant off the hop. So that is why. And we've got a few sell imbalances here this morning. Just be a little bit cautious here on some of these longs. Exxon Mobil, 42,000 to sell. Bank of America, 115,000 to sell. Our friend GE is always there, 193,000 to sell. GE has been there for 2 years, or she. CVS, 30,000 to sell. Philip Morris, 48,000 to sell. Taiwan Semiconductor, 48,000 to sell. Scrambling, looking for buy imbalances here this morning. I do see one in AT&T and Pfizer, 36,000 to 39,000 to buy respectively, but doesn't look like a superstar flying open to me.
Yeah, then you're kind of mixed here. We're getting a question. How high can Apple go? Who knows? 281.77. Yeah.
280, you get to 290, I think it's going to 300.
Oh, the 300 tractor beam.
Well, eventually it's going to come into play. You got to think. You got seasonality working in its play, unless there's an analyst that comes out and poo-poos it, or some iPhone numbers come out, or something like that. And we even saw, who was it yesterday?
They've tried that with the iPhone numbers.
Well, it was an analyst speculating, but we never got any actual data. So it was an analyst saying
that.
So there's lots of opinions out there that the iPhones are going to be weaker. Somebody wants to be a hero, try to call top on Apple, and we see what happens. It just makes a new high anyways. It's been unbelievable. It's been the year of Apple. No worms in this one.
No. Yep. Overall, just 280.41. You just want to look at the closing price, maybe more emphasis than the all-time high at 81.77. So Apple's a pretty good. I mean, it will give you a setup there if you get to the same area. Like I'm looking at, you had 3 highs at the 271 area, 3 out of 3 out of 5 sessions. Boom, you busted through that. You had another leg higher, and then your highs really separated each other. So, it will give you 2 or 3 looks at a top. But right now, that high from yesterday, a buck above the high from Monday. All-time closing high, 80.41.
Back to stocks if we don't have any. I want to go to the ratings for a minute here. We only have 1 minute before we're going to go to guest, but there was a lot of ratings again.
Can I pause that? Because we did get paychecks out a few minutes ago.
Oh, sure. Give us the PAYX.
PAYX reporting for the second quarter, or their second quarter. Adjusted EPS of 70 cents versus 68-cent estimate. Sales of 990 versus $987 million. So a beat for paychecks last quarter.
There's been hardly any trades here, so we're still figuring it out. 85.50 bid, 86.50 offer. Again, it's hard because it's traded like a couple hundred shares only since the report. So it looks like there's some buyers forming that want to buy it. You can see 85.50, 85.55, 85.60. So there's a few buyers forming, not a lot of sellers in there, which means it's thin, which means it could really run if it wants to, but it's not, a blow-away quarter here either. So I'm going to wait until I see more price discovery happen before making a call on this one.
Yeah, a couple highs right here, 86.49, 86.77. So if this is going to be a super runner here, then you're going to get 87 bid very quickly, go up all-time high if you're so inclined to look for that. 88.43 was your all-time high in June of this year. But let's see if we can pop into that 87 handle off the open.
Okay, 8:35. Let's bring on our first guest of the day, Mish Schneider. She is the Director of Trading Education and Research for MarketGauge. Let me see if she's on here and unmuted. Mish, good morning.
Hi, good morning. Can you hear me?
I can. How are you doing?
I'm doing great. How are you guys?
We are just trying to figure out what to make of a market at all-time highs 12 months after we were most definitely not at all-time highs. So,
yeah.
What do you think about this?
Well, you say the market at all-time highs, but that's only part of the market. So there's the market, which is the inside of the market, which, we've talked about so many times, some of those sectors that are nowhere near their all-time highs. And then you have the Fortune 500 and the NASDAQ 100 and a lot of the Dow stocks at all-time highs. So there's still a disparity there. I'm not trying to be negative. I'm just saying, essentially what every economists are saying right now, which is the market is running on corporate buybacks, on low interest rates, on dividends given to stockholders. And in terms of the economic picture, like transportation and brick and mortar retail, and even the small caps, which have had a nice pop, and we're very happy about that, certainly gave the rest of the market some legs, is still a good $7 or $8 away from its all-time highs. So you got to look both places and just keep it in mind. So that's, it's not a great economy why the market is running, for sure. But if it's looking forward, perhaps the economy will improve. So we're trying to be very optimistic.
All right, let's you did find an interesting formation here for you you candlestick fans out there. You're talking about some shooting stars here. Can you tell us what they are and what you're seeing here in the Spider ETF?
Right. Well, first of all, the shooting star, when I sent you the chart, it actually was a little bit less perfect, textbook perfect by the end of the day. That chart I put together about an hour before the close yesterday. And the SPY chart actually sort of the second stick wasn't quite as clean, because the whole idea of a shooting star is that you have your closing prices and your opening prices relatively the same. So I wouldn't necessarily take too much credence on the SPY candlestick chart. What was much more picture perfect, believe it or not, was the DIA, the Dow Industrial chart. That had more of a candlestick. So, no one particular chart formation is that important. It always has to be all these other factors involved. I mean, maybe unless you have like a major island top or a major island bottom, those would be extremely powerful. But in terms of shooting stars, they have to confirm, which means that the price today would have to close lower than the price over the last couple of days. So if we just look at SPY, even though it's not as clean, that would mean that we'd have to see a close today underneath 319.17. If we're looking at the diamonds, it means that we would have to see a close today under really basically 280, 290 area. So considering the market's coming in higher right now, I mean, of course, it's a long day ahead, anything could happen, but then we would start to say, maybe we're seeing a little bit of a correction time. The other thing about the SPY that I found interesting was the volume. The volume over the last couple of days hasn't exactly been blowout proportion, but it has been above average. So when you have above average volume and you have these sort of shooting star sticks, it at least gives you a reason to think, do I want to keep loading up long? And maybe it's time for me to raise stops on existing longs, take some profits if I have targets, etc.
All right, another area of interest, of course, is interest rates and inflation. And you asked the question, has the Fed de-iced inflation from its 40-year low? What are the dynamics of that statement and behind that statement?
Well, the last meeting that they had, they basically said, obviously, that they were going to keep the status quo, but there's been a tremendous amount of repo buying. As you know, they've injected a tremendous amount of liquidity into the market, over $450 billion, with intentions to do more. And so what's basically happening is that with central banks throughout the world already at 0 to negative rates, even though the United States still has a higher interest rate, the intention is definitely there to try to keep the gas on the market and the economy, because of what we talked about in the beginning. Some of these other sectors like transportation and retail and even small caps haven't really done what the other parts of the market have done. So what can this do? People are talking about the reflation trade. I'm not the only one.
Okay.
And essentially we're already starting to see some of those signs. Number one is copper has been picking up, which has been kind of wonderful because copper's been beat up for so long. There's two implications of that. One could be inflationary, and one can just be that, again, it is showing us that the economy could wind up improving, considering we've had strong home builders, etc. Copper is a great raw material. Steel has done better. And interestingly enough, sugar, and we've talked about sugar. Remember, Joel, that was my very, 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 very first trade when I started in the commodities exchange.
Yep.
And it was back in the day when inflation was going crazy. Well, if you look at the sugar chart, and if you want to look at the continuous contract, it would be at SB.
Yep.
Notice how that has come out of a base since August, September, October. It's actually cleared the 50-week moving average, and it's trading close to, well, it's certainly at a multi-month high. It actually hasn't quite reached what the 2019 high was yet. But what more importantly is if sugar, which in 1974 went crazy, went up to 66 cents. Then in 1980, it went up to 40 cents. Then in 2015 was the last time it had a nice move. So really, we're talking about over 5 years, it's been dormant. Sometimes it's an interesting barometer to show that inflation is on the rise. So that's something that we're looking at. And, there's a level of inflation that's healthy, of course, because you want to see raw material prices and global demand increasing. And then, of course, that there's a point where it can get out of control. And that's where the Fed is saying, oh, we're going to let inflation run hot. And then the last piece of that would be what happens with the US dollar.
All right, let's talk about the modern family here. That's what you use to characterize different stocks and different sectors here. And let's talk about the XRT in the retail sector.
I'm so glad you brought Granny Retail up. Well, that's been lagging. Amazon had sold off, so the whole retail space was lagging, and retail sales have been weak. And of course, in terms of the economics, household debt is at a high, and a lot of people are still paying off shopping from the last season in 2018, let alone buying now into 2019. And that's what we've seen reflected in brick and mortar retail. However, as a wonderful quote that I put in my daily last night was once said, don't always trust what you see in a bull market. Even a duck looks like a swan. That's what we're wondering right now. Is Granny Retail looking more like a swan? So what we have is that it's cleared all of the major moving averages on the weekly chart and on the daily chart. It's gotten back over the 80 monthly on the monthly chart. So if this market is good, there's opportunity there. I was listening to you guys before I came on, talking about some of these high flying stocks like NVIDIA. And, the risk on those stocks are high. The risk on something like retail is manageable. You're going to either be right because it's going to hold 44 in XRT and see a move up to say 46, 48, or even 50, which still would be nowhere near all-time highs. Or you get out very quickly and you're wrong, and that of course would be a warning to the entire market. But there's opportunity. Nordstrom's has done better. I heard you guys mentioning Home Depot, that's doing better. So a couple of those retail stocks, Capri, which is the formerly known as Michael Kors, is starting to base out. So there's opportunity there if the market stays good.
All right, and let's talk small caps a little bit. Maybe small cap transportation, IYT. See, that's bumping up against some resistance here. Transportation's sector, important part for the overall market. Boy, it looks like it's just trying to get through what? Can't quite get to 200. Let's talk about the small cap transportation ETF, IYT.
Okay, well, IYT, by the way, was doing pretty good until the FedEx sales came out really weak. And, Federal Express right now is coming in about 7% lower, which is actually up a little bit from where it was when I first woke up this morning. So that's not a great thing. It's just an impact. So IYT is one of those inside of the market looks that really needs to hang in there. It represents the demand side of the economy. And so that whole consumerism, that's really going to be the biggest concern. Either it wakes up or it doesn't. So watch IYT. IYT right now really needs to hold somewhere around 192. Otherwise, it's going to take another visit down to around 190 or even lower. And if it breaks down under, say, 188 at some point, I would find it very hard to be bullish anywhere in the market. So that's important. So that's demand. If we want to look at supply, now we go to the small caps, which is actually IWM. And what you see reflected here is optimism about the trade and the tariffs actually being resolved. Although we haven't seen anything tangible, the market, again, always being forward looking, is anticipating that there's going to be a phase 1 deal signed, and we're going to start looking at phase 2. So if you look at IWM, it looks a lot better. It's actually due to come in a little bit higher. It broke out of an incredible channel several weeks ago, but again, still has a ways to go. All-time high is 173.39, current price 164.84. So there you go. We're still $9 away. So you have to say, is this market bullish enough, considering transportation is struggling, to get all the way up to its most recent all-time highs? Question. Don't know. Don't know.
We'll have to wait. Looking at the S&P Regional Bank ETF, KRE, it cleared a major hurdle here. I'm looking at the monthly charts. Had a very, very hard time, well, getting through 57 and a quarter. That held up for several months. Busted through it here, working our way back up. What's your outlook here? I mean, interest rates, I mean, if they're going to stay, they're not going lower, right, immediately in 2020, and not necessarily going higher here. So let's talk about the regional banks and potential catalysts for them.
Well, definitely this has come up as we have seen the interest rate yields rise a little bit. You know, the TLTs were really high flying for a while, and now in the last few weeks, they've come off from their highs, but they haven't exactly fallen apart. They're just actually coming into a zone that might be an interesting buy area. If you're looking at TLTs, if they get closer to 135, that would be a compelling place to buy the bonds. Now, how does that affect KRE? Well, there's two factors here. Yes, it's interest rate sensitive, but remember, it also reflects the rural communities and the banking. So are people borrowing money to buy houses and start businesses? It's showing that yes. However, again, is that real or not? We don't know. Is this being dragged up with the rest of the market? It certainly seems that way. And once again, if you look at the SPY versus this, the all-time high in KRE was in 2018 at basically 66. It's trading 59 right now. So again, all of these things are looking like ducks that have turned into swans, but in order for them to remain beautiful and swan-like, we really cannot see any sputtering out in the bigger stocks, because those things will tumble as well, unless the market really believes that the economy is going to improve in 2020.
And let's go off the board here from the Modern Family, and someone new, can't really pronounce her name in the YouTube chat. Do you follow Tesla at all?
Oh, yes. In fact, one of our quant models, the NASDAQ All-Stars, has been long Tesla. We got in at around 325. We took a profit right just below 380 on partial of the position. This is the quant model that measures, does a trend strength indicator type of thing, and trades the top trend strength indicator, 5 top trend strength indicator. Well, that's hard to say in the morning.
Yeah, that's a mouthful.
Of NASDAQ. So Tesla has been one of them. And yeah, right now, if it's so interesting, because if you look at if you go back in Tesla, there is a channel that basically has been from $380 down to about $250. We briefly broke under that channel this year when Tesla sold down and everybody thought that Tesla was done, yada, yada, yada. And now after we've come back into the channel, which was really where your great buy opportunity was at around 250 if you were paying attention, now it's at the top of the channel. So I would certainly be taking profits up here, but I wouldn't necessarily let go of the position. I would just say at this point now, we want to see Tesla hold around 350. That would be your widest swing stop. And if we can get through this 380, 385 level, well, it's possible that we can see Tesla go much higher. It looks unbelievable. I mean, right now, let's see, it's almost about to make new highs. Let's see what the all-time high is here. The all-time high in Tesla is 389.61.
Yeah,
looks
right
like
there.
Yeah, looks like we want to take a trip there and see what happens.
All right. Anything else here? We're going to wrap things up. We did cover all the Modern Family here, but got a really good perspective on the market, Michelle, Mish. Anything here heading into year end? Santa Claus rally, I guess we have a pretty nice rally on top of this. Anything that, any major turning points? I mean, for me, the only thing I can look at for the S&Ps is the pair of highs here, 3202.50 and 3203.50. I mean, that's resistance now. Anything you're seeing in the market, year-end thoughts?
Well, I definitely believe that some of the stocks that have been really beaten up would be interesting to look at if this is real. Like for example, I'm already in Beyond Meat. I bought it. I bought it down at around 74. I actually added some a little bit yesterday at 75.5.
How come? Why'd you buy it?
Well, I really, every time I go out to eat with groups of people who are not vegetarian are ordering it. They're ordering the Beyond Meat and they're saying how good it is. And I think that especially the younger generations, which are environmentally conscious, believe that trying to eat some more plant-based type food is good. And Beyond Meat is kind of a nice little in-between between going vegetarian and remaining a carnivore. So from a megatrend, I like the stock. It's been beat up. I mean, you remember what that stock did when it came out. It went insane. And of course, that was insane. And so essentially what it did at around 71.30, its low, is it had a nice little reversal bottom with some good volume. So if it holds up here, say around 74, I think that would be your new risk at this point, and starts to get through 77. I like Beyond. And so I'm watching a lot of the stocks that I would typically watch that have gotten killed. Like, for example, Kroger being one, or Square, or Zoom, which we're talking on right now. Chewy would be another one. All these retail type stocks or services that people use all the time that have not monetized, but could potentially monetize as we get into 2020.
All right, Mish Schneider is the Director of Trading Education and Research for MarketGauge. He's the host of Mish's Market Minute. Mish, thanks for the time today and have a great holiday season.
Yes, same to you guys. Very happy holidays, healthy ones, and I look forward to seeing you all in 2020.
Definitely. Have a good one.
Thanks.
All right, 8:53 here. It is still quiet out there.
Yeah, boy, oh boy, oh boy. Yeah, Triple D, any activity
I just want
here?
to say with me, she's giving you good levels on a lot of stocks, and I can kind of see what she was looking at even in Beyond Meat. And we've obviously dogged this stock since birth, really, on the Beyond Meat. But you know what? It stopped going down. So if you want to take a flyer, you have a double bottom in place,
Yeah, you do. I
71.30
noticed it. Yep.
and 71.64 from we're looking just from 2 days ago trading, the 16th of December and the 5th of December. So you have a level now to lean on, and a good candle there yesterday. So could you get a little end of, a little relief here? I mean, we do have tax loss selling season coming. There's probably a lot of people who are sitting on loss on this one, but the candle looked okay from yesterday. So I'm not saying I'm jumping in with Mish here and Beyond Meat, but I can say I see what she's looking at. And as long as you've got it out, and you now have that in the case of BYND, so I don't mind that setup.
We somehow slipped past General Mills this morning and didn't cover that. So let's just do it real quickly. GIS reported earnings a couple hours ago now. Q2 EPS 95 cents. That's a beat. Sales 4.42 billion. That's a slight miss. And they also reaffirmed the previously issued guidance. EPS will grow 3 to 5% next year.
Just it is what it is. I mean, these food stocks don't really move around that much. Let's go look at the book what Jill does the technicals. I'm curious if there's anything at 54.
I don't know. I mean, where are you at?
54. These levels jump out at you even on the charts. I guess how many shares are at 54? I looked at that right on the kisser at 53.99 on the 6. I was like, there's got to be something at 54.
117,000.
Really close, 95,000 shares right now. So call 100,000 shares. So it takes big bucks to push it through there. I mean, that's the story here. So if you're trading General Mills, 54 is the level. We got up there 3 times back at the beginning of December. We bumped our head against it and could not get through it. Can it get through it this time on the first time? I'm skeptical. So you know what? I might be trying to short it there the first time around.
Yeah, I mean, you might even have some problems ahead of that because, yeah, I see a pair of highs at 53.44, 53.47. There's two highs right there.
Major
So,
resistance when you start getting up in the
yeah,
upper
yeah.
53s. And,
So
you know, now you're up and yeah, the earnings are okay. And yeah, it's trading higher here, but we've seen earnings reversals before. It's a nice setup. You know, trying the short. If it takes out the 54, you get the hell out. So you risk yourself, you know, and sometimes there's some slippage there because everybody's leaning on it. But, you know, if you're trading this thing and, you know, and it obviously, you know, 53.85 is short and it gets out, starts to go near the 54, you get spooked maybe. But if it takes out the 54, you absolutely do not want to be short. So I would say shorting in the upper 53s, leaning on 54 very cautiously. That's the setup for me in General Mills.
Okay.
Can we do a quick setup in Micron reporting after the close today?
Yeah, it's been running. It got the upgrade yesterday and peeled back from it. We were skeptical.
Yep. 2 days
Yeah,
in a row.
I'm still long in the long-term portfolio. High expectations, although yesterday's candle helps. If you show some weakness, then maybe the expectations aren't as high all of a sudden. So it depends on what it does today for the expectations that are going into the results there tonight. But I mean, it's been a big move. We still put it in perspective. The stock was $45 at the beginning of December. We got up to 54 there yesterday, 9 points on a $44 stock. You're talking about a 10% move in a week and a half. It's had a big run already. So I would still say it needs to blow it away to go higher.
And you got some nice, well, first of all, if you bought that thing on the open, you got stuffed for $53.99 open, 54 high. If you were looking for the previous day's high, 54.30, and never got it. Sold off. I think what's interesting here is you got a pair of lows in the same area. So if you're trading this after hours, keep an eye on 52.70, two lows, 52.69 and 52.65. Trapdoor there, $2 lower to 50.70. Pair of closes right here at 53 as well. Really need to clear 54. We'll see. Could go anywhere on the report, but that second upgrade was a little tricky there.
And then just move over to the
minutes
ratings here. Yeah, just we didn't get to ratings yet.
And there's just a ton of them.
How did we not get to ratings?
Busy show, Joel.
Sidetracked by things. There are a lot this morning. Again, I would point to AMC, which is catching a downgrade here to underperform at Bank of America. That's AMC Entertainment, so ticker AMC, not ticker AMCX.
Movie theaters, not for me.
Yeah. Anything that stuck out to you, Dennis, as far as ratings?
Lilly with an upgrade here. Lilly has been hot. I mean, it's been talk. It was on Mad Money. The CEO was on Mad Money last night. The stock's been unbelievable. Again, it just goes to show you if you're holding your long-term portfolio, you're happy. I bought this thing at 30. I sold in the 80s because I thought it was done going higher, and now it's 125. Don't sell the long-term stuff, especially when it's going up. So we got an upgrade from Morgan here this morning. They're upgrading it to overweight. That's going to continue the party to a certain extent. I see Delta got an upgrade from Deutsche Bank. I also see, what else? I'm looking at the names and the upgrades. There's a lot of, you know, there's some REITs in there.
Yeah, I've been seeing a lot of REITs lately. I think they've been pretty bullish on the same side of the market with the REITs.
Domino's Pizza downgraded.
Yeah,
that hasn't had a downgrade in a while.
And a longbow to neutral.
Just maybe a valuation call. And they're probably looking up at the 300 level. I mean, these levels come into play. Let's go look and DP Zebra. Oh, wait a second. DP Zebra's New York.
Yep.
Bringing it up. I just want to look and see if there's something at 300. 300. Oh, yeah. 299 before that. 26,000 shares. A $299 stock. It's big. So, and then at 300, there's another 15,000 shares. So there's some major resistance up there. That's not going to come into play. Stocks going the opposite direction, but it's always interesting when you see these charts top out just below the number. You wonder, is there something perched there? And indeed there is. Halliburton gets a downgrade.
Yeah, I was just looking at that one. Boy, that stock has had a heck of a rally here.
Short squeeze.
You think so?
In my opinion, I think so. I don't know how high the short interest is, but a lot of people speculating that oil's in trouble. And you look, Schlumberger, you know, you've seen the stocks, and obviously, you know, it's obviously dependent on oil, and oil has come back as well. So you could just say this just trades off of oil, and it really does. But we've seen instances in the beginning of the year where oil was rallying and Halliburton, Schlumberger were not. Now they are participating. So that's the good news. The bad news is these stocks, you know, you look at Schlumberger and you think, holy cow, 40 is huge. I got to look in the book on that one too. There's a lot of books. A lot of the books coming into play here this morning.
Yeah, but still, you look at the relative performance here, and we've talked about this before for SLB, Schlumberger, and Halliburton. I mean, those stocks are 50. The SLB is less than 50% of what it was in 2014.
Oh yeah, they're still in bear
So,
markets.
yeah, just say can't even when oil's rally, they seem to have a hard time. But we'll see what this downgrade does here after a big old run from 18 and change. We got a trading
85,000 shares perched at 40 on Schlumberger, SLB.
Okay.
So
That's a
that's
little-
huge too. I mean, the Bucks, they're just big numbers here. Some institution looks and says, hey, we got up there back in September to this 40 and we failed, and then we ended up dropping $9. It gets back up there, I'll sell it. So they sit out there with 85,000 shares until that gets taken out. 40 is going to be a struggle. That gets taken out, then it starts to break out. So it's all about 40 in SLB.
And we didn't cover PCG.
So they're going bankrupt. They're not going bankrupt. Well, they are bankrupt, but there's, it looks like it was good news last night. There might be something for shareholders. At least that's what they're speculating. Stocks trading up 10% here in the pre-market. I don't buy bankrupt stocks as a rule, but Spencer, give us the details.
Well, the headline was that the bankruptcy plan that they had released last week that then got rejected by the governor has gotten approval from a judge. So this is the settlement plan, the $13.5 billion one. So they didn't need the governor's approval, I guess. They got a judge's approval on this bankruptcy settlement here. So I guess that means it's final, but at this point, who can say? So, I don't know. This is a story that never ends. All right, that'll be it.
That never ends.
Yeah,
Never be bankrupt forever, my friends. Okay, go ahead. Sorry.
I thought about
What was that from?
That was from the movie, right? Yeah. I thought
It's
about that.
well, it's a song that never ends.
No, wait. What's the movie called? The movie that never ends?
Well, that was Never Ending Story.
That's what I meant.
Remember, what was the dragon's name? There's a trivia question
I don't
for you.
know.
We'll do a trivia Wednesday. What was the dragon's name?
Never Ending Story. Yeah.
Dragon's name from Never Ending Story. That movie's terrible.
Don't know. Okay, that'll be it for the first hour of the show. I want to thank everyone for joining us. You can catch this hour on our podcast on any podcast platform, iTunes, SoundCloud, Stitcher, Spotify, or on YouTube. I'm going to end this first hour here and bring on our second guest for today, Sean Udall. He's the CIO of Quantum Trading Strategies. We'll chat with Sean for the next hour or so. But for everyone listening in the first hour, thank you so much for listening and have a great rest of your day. And now I will bring on Sean Udall. As I mentioned, he's the CIO of Quantum Trading Strategies, has been joining us every Wednesday here from 9 to 10 to hang out and shoot the breeze and talk markets with us. So, Sean, good morning.
Testing 1, 2.
Yeah, we hear you.
Well, good morning, Benzinga.
That's a great way. Sean, how you doing here? Getting
Good.
a little holiday holiday markets? You closing up shop? You doing a little window dressing? What are you doing here then? A little quiet today.
This is one of my favorite times of the year. I think some people manage, try to manage a number from Jan 1st to December 31st. And I think my view is you're better off managing your opportunity set. And I always find the end of the year, the opportunity set is extreme, meaning extremely good. There's a lot of stocks that go down for no reason. There's a lot of stocks that go up for no reason. We can talk shorts, we can talk longs. I put on a couple shorts here recently. So I don't know, we'll see. And then this has been one of the strangest years that I can think of. And I don't know if it's going to end really. I think next year is going to be a pretty exciting year. I gave a little preview, Joel. I don't know if you want to play this game today, but I said, hey, if you wanted to, maybe we could talk some themes for the year.
Sure.
For some stocks for the year, some sectors. So basically, instead of focusing on the nitty gritty short term, which is always good for me, but maybe some ideas. I always love to hear your ideas on, where you think certain key things are going to go and, in coming months,
sure,
months and weeks and quarters and stuff.
Okay. All right. Well, let me pull out my crystal
By the
ball
way,
here.
best upgrade, smartest upgrade of the day was an upgrade of IIVI. I can't remember who did it. Anyway, in my view, that's the smartest upgrade of the day. So that analyst gets a gold star.
And now looking at this one, I got the daily chart up here. We're trading up 31 cents at 33.44. We got a little gap to fill. I mean, I don't see much in here up to 34.60. That filled the gap. I don't know what happened. What happened to be getting in November in this thing? Was it an earnings report?
I believe it was. Yeah, it was an earnings report. Kind of got a little carried away. I mean, I was talking about this, 5 points ago. And this has been a really nice stock. I mean, this is another one of those stocks where, sometimes people like to look at a stock and say, oh, geez, it's, look, it's gone from 60 to 160 in over 4 years. It's great. This stock is, by the way, I think there's a massive amount of upside in the stock, but I think this has been a really good trading stock for roughly about 2 years. It's been a very defined range. Pretty much anything 32 and lower you could buy and buy with a high degree of confidence. And there's been several times it's gone up, 35 to almost 50%. So there's been a lovely stock. So people that know this name know that this and Lite, Lite, are basically an oligopoly position. I've liked Lite. In fact, my last buy on Lite, I think was 42. I'm not in any Lite. Well, not in hardly any Lite anymore. I think I've got a placeholder position. But as just to compare, Lite trades like 3 point something times sales, IIVA time trades about 1 time sale. They're basically the same company in a lot of ways. In some ways, IIVI is better. In some ways, Lite might be a little better. But I think it's pretty crazy that Lite trades at 3 times sales, IIVA trades at 1. I think basically their valuations will meet towards the higher end. Like, I don't think Lite's necessarily going to come down a whole lot. I just think IIVI will work themselves much higher on a price to sales basis. So this stock has a lot of room to the upside. But again, very smart upgrade. I think the price target was 46. I would say that price target is probably pretty conservative.
All right, let's talk an upgrade there. Let's talk oil. I know you wanted to talk about that, and I have a feeling that you're going to say this is one of your 2020 trades. You're.
I think it is. Yeah. I think oil stocks probably better than oil itself.
But oil stocks have been pigs forever.
Terrible.
Yeah.
Terrible. I think there's a lot of reasons for it. I think there's kind of a perfect storm. You have yet another year of growth stock leadership, which is the longest in history. Growth stocks have never outperformed longer than they've outperformed in this cycle. So you've got this ever present, growth stock outperformance that doesn't seem to want to die. Here's the strangest thing, that how oil stocks have performed relative to the price of oil. Because the price of oil has had a pretty decent year. In fact, I'm looking at your chart, right? I mean, the low was under 45, and it looks like, traded to, almost 70, and then it's still 60. I mean, this is normally, I would have said if we knew nothing and we just looked at this oil chart, we probably would have said there are plenty of oil stocks that probably had pretty good years. When in fact, none of them did. I don't think any of them did. So, I've definitely seen oil look a lot worse. I remember times when oil went from 36 to 10, or I remember times when oil went from 120 to 30. And I think oil stocks probably have performed worse this year than those 2 times I just mentioned. So, it's very, very strange. I think there's a lot of people trying to push this oil. So a lot of players in the oil space are going to go bankrupt. Yeah, there's some smart people with that belief. I personally don't believe it. I think they're going to be wrong. I think there's going to be very few bankruptcies. I think you're going to get oil surprisingly strong. And a funny thing happens when oil is 70 to 80 bucks. Lots of oil companies that formerly look terrible look gorgeous.
Yeah, no, we were just talking about Halliburton and Schlumberger and these stocks, and oil has had a decent year where they've had some rallies off the lows here, but we've had a nice rally here. Holding 60s big. Do you got any Yeah, you know, that 63 and change, that was on the bombing of the Aramco facility. 63.28. I'm looking on the dailies, and you had, after that 63.28 high, you had 62.49. So couple bucks here. You think we're going to go up and test those highs? I mean, oil gets going one direction. It's hard to stop it. Any targets?
Yeah, I think I especially think in the back half of next year. I think
Okay.
I think there's a lot of things kind of coming up. You know, maybe for another quarter or two. I don't know. I mean, if oil's 75 by March, I wouldn't be surprised. I would think that would be a little early for
Right.
that move. But I don't, you know, oil can do some pretty crazy things. But yeah, there's also, you know, like a lot of times the stocks will move with sort of like the kind of how the production schedule looks. And right
Yes.
now, there's so many areas where production's down. And if, you know, I mean, we're probably one more sort of global OPEC type range cut away from oil almost going up a surprising amount. I think, you know, everything in the oil market, I think, works in the margin, right? So like everybody thinks, oh, the 6 million barrels or 9 million barrels. Well, I would say that probably the incremental 300 to 500,000 barrels a day moves the price, not the 6 million barrels or whatever the number is. But yeah, look at that Halliburton right there. That's a pretty good healer. You know, that's still a very cheap stock. I think Schlumberger has done a little better. I probably would favor Halliburton personally. I like them both, but I don't know. I think I would favor Halliburton personally. I kind of like that chart. You know, very solid company.
Have you been following the Aramco IPO at all?
Yeah, and I mean, that was kind of one of my conspiracy theories that, you know, I didn't think they would get that IPO out and then the price of oil would collapse, and
yep.
Yes, and their IPO would be a total disaster. So it wouldn't surprise me at all if oil is supportive of that very large. By the way, you know, it's interesting. It's been very quiet. It's been very quiet how it's been trading. Not a lot of fanfare. Isn't it the largest? Pretty sure it's the largest publicly traded company in the world.
Yeah, it took over. Yep, it took over right away. All right, let's move on to some things that you've shorted recently. Spinner says, Sean, what names did you short recently? And he's got out his pencil and paper, so he's going to remember these. Sean, what do you?
Yeah, well, these on the
short radar.
Yeah, so there's two. I always say there's two types of shorts. There's a trading short, which you want to have a view that your odds of making money are the same as all your trades, and then there's a hedge short. I would say right now I'm kind of toe dipping on hedges because I think it's a good time. But Apple, I put an Apple short on. And again, it's more of a hedge, and to me, Apple's a good hedge. And the reason is because, hey, if Apple keeps going up, it goes to 300. My guess is most of my longs are gonna probably do fine anyway. So if I lose money on it, it's not that big of a deal. However, if the Nasdaq does correct, Apple it's not 100% it's got to go down, but man, it's pretty close. So, you know, if there's going to be a significant Nasdaq correction, which is kind of what I'm not necessarily predicting it, but I'm protecting for it. So I want to hedge. You know, we've had a big move here, especially in the last 6-8 weeks. So I want to just at least start putting some protection. I've spent a lot of this year with actually probably a smaller amount of hedges than I usually have too. So I think Apple is at least one of something I feel very comfortable shorting. Whether it goes up or not doesn't really matter to me. If I'm wrong, I'll probably just keep hedging it. But my view is if you're going to get a 3 or a 5 or something more like a 7-10% correction in the NASDAQ, Apple's basically got to go down. So another one I'm looking at is Soxl, SOXL. This is, I believe it's a triple levered semi. This was one of my best shorts of the year. I shorted this at 200, which at one point was a former high. I covered, I think, in the high 130s. It went down to 100. I haven't shorted it since then, and I'm looking at that right now. I think that, and that's an interesting chart. It kind of looks like maybe a little island reversal-y potential. Like, you know what I mean? It hasn't put it in yet, but I mean, put it this way, you get one big down day, that does look like an island reversal. You know, I kind of always think about what the chart is going to do, not what it's doing.
Yeah,
but
look to the right instead of the
so
left.
you can just put up the SMH. I mean, if you don't want leverage on it. But interestingly, I looked at this and I thought the put spreads were relatively cheap. So in this one, you can, I can do like a 25. I think my put spread I did on this before was a 40 pointer, maybe 35. Anyway, I mean, I was looking at 25, 30 point put spreads, and I didn't think, given how volatile this is, I actually didn't think the put spreads were that expensive. Again, I would view this as a hedge, though. I wouldn't view this as like, a tactical short that you have to make money on. And then I'm starting to look at some FANG names again. I'm starting to look at some cloud. Adobe would probably be of the individual stocks. Adobe would probably be about as prime as anything in the software space. I mean, they've gone up quite a bit on a quarter that really wasn't any different than the last 8 quarters. So Adobe looks like, what we talked about at the start of this show was, always look at what are opportunities, how good is your opportunity set. And to me, something like an Adobe literally is just running up because people are performance chasing it. So what's going to happen January 1st or whatever the first day of trading is next year, and then beyond, is there really going to be much impetus to buy Adobe once the year ends? I don't think there is. So, and you could put 40 stocks in that category, I think, right now. But Adobe, I think, sets up. By the way, that kind of looks a little potential island reversal as well.
Yeah, gap and go after earnings with Adobe here. First red candle in 3 days was yesterday, so you can keep an eye on that one. Let's see, your old time.
But it's basically a theme. Like my theme is, look, what's basically gone up? What does everybody love? What is everybody piling into? Just as a end of year play. To me, that's a really dumb reason to buy a stock. Just like a really dumb reason to sell a stock is for tax law. I mean, I'm not criticizing anybody that's doing tax loss selling in the year this time of year, but I kind of am, because I think you should have your tax loss selling done way before. So if you're tax loss selling now, you're basically playing into everybody's hands. Where if you're done tax loss selling by June, you're being proactive, right? So, stocks that are going down for no other reason than tax loss selling might be good opportunities, because once tax loss selling is over, you might get a good pop out of them. So it's basically the same trade. The trade is, look, you buy what everybody's puking up for dumb reasons, and you short what everybody's buying for dumb reasons. And there might be some smart reasons to buy Adobe, but I think buying Adobe for a year-end chase is a pretty damn dumb reason.
Yeah, marking it up. Let's take a look.
Yep.
We get a question here on Dropbox, DBX, and had a bad day a little over a week ago, and a couple bad days went down. I'm not sure if that's a new all-time low here in Dropbox.
I think it is. Yeah.
Yeah. What? Any thoughts on DBX?
Well, this is not a name I've ever loved. I have been long this a couple times. I would say I would much rather be a buyer of it here than a seller of it. I think this is a perfect example of a tax loss sell kind of trade that's happening right now. In fact, for my subs, I put out a January effect list. I think I had 40. I definitely had 30 stocks on it, and somewhere between 30 and 40. This was in that long list. It didn't make my top 5, but it's I think it's a viable trade. I could buy it before the end of the year. We'll see. There's things I like better. But I think that where it is valuation, I mean, I like Dropbox better than Box. So like people seem to love Box and they don't like Dropbox. And to me, that's kind of funny, because I actually think Dropbox is the better play of the two. So, we talked about this, Box used to trade just as poorly as Dropbox trades today. This was a hated stock at one point. It was dirt cheap, between $9 and $12, was stuck on the bottom for a while. Then all of a sudden, something kind of got it going. I don't know if it was like a third quarter that was good in a row, or it might have been a couple hedge funds digging their heels into it, really buying a lot of it. It might have been some insider buys. It might have been a confluence of positive things. But, Box went from basically 10 to 30. And nothing really changed. It was just it was a valuation sentiment trade. And I think Dropbox could kind of set up the same. Again, I like it. I don't love it. Like, I like Nutanix at lows a lot more than I like Dropbox at these lows. IIV I like a lot more than Dropbox, but I think Dropbox is a good January. I would be surprised if it's unprofitable trade from here, you know, into the first 4 to 8 weeks of the next year.
Do you follow gold at all in gold stocks?
No, not, you know, I do. I follow it enough to where if I think it's kind of crazy, I'll short it, but I don't. To me, it's kind of been a boring, lifeless trade for quite some time. I think, you know, you and I have talked about this. It almost seems like Bitcoin, kind of the Bitcoin trade has kind of overtaken the gold trade and kind of become a substitution for it in a lot of ways. You know, the gold bugs are probably kind of the same people who are Bitcoin bugs. But yeah, I haven't done a whole lot with gold.
Yeah, I'm just looking at this.
Why do you bring it up? Just out of curiosity.
Old 5E just wants thoughts on Royal Gold here, RGLD, and I'm just pulling up the daily here, and I mean it's winding up. It's definitely winding up here.
It's had a good year. Had a really good year.
Had a good year. I mean, someone's just buying stock here in the 113 handle. These are the lows, consecutive lows that you had: 1357, 1313, 1342, and 1340. And then they stepped it up. So I don't mind it here for a trade. You're trying to buy it here. Oh, that support in that area. Maybe, you know, give it a little bit more, 142.5. And conversely, if you can, you know, get above 116 and stay above 116, I think you got a chance in a rally here. But nice consolidation here, and that support is really well defined here. So if you look, that's what I'm looking at. In RGLD, good for the year, but
yeah, looks like a nice. I mean, really beautiful move off of
May low.
It basically broke kind of a mini trend line break around May, June, and then that thing lit up.
Just real quick, we're just getting some Bitcoin chatter in here. It was 2 years ago, I believe yesterday. It hit an all-time high, just sinking lower here. I don't know if I've ever talked Bitcoin with you. Do you follow it?
We haven't for a long time. I think there was one time when it was right around highs where I think you and me and Dennis all agreed that it was a bubble. It was just a matter of when it was going to pop, and I think it popped within about 4 days of us having that discussion, actually. But we didn't spend much time on it.
No.
You
Any
know,
price you'd be interested in it on the long side, or is just too much of an unknown to you?
I'd like it a lot at 400. At 400, I'd buy some. I mean, I'm probably in the camp that long term, I'm not sure it's worth anything. You know, this is not exactly an original thought. Buffett's basically said something very similar, but there is utility. As long as there's a market, as long as people are utilizing it, as long as people, put it this way, if it's gaining payment and merchant acceptance, it probably remains viable, and it is gaining merchant and payment acceptance. The problem is, you know, if something is a currency, so this is the problem with Bitcoin. Is it a currency, or is it a speculative? Is it a store of value? It probably can't be both, right? Probably can't be both. So because a currency has to be stable, or it doesn't work as a currency. A store of value has to actually have something tied to it that has value. It produces something. So I guess if the only value is scarcity and speculation, I don't know how long that lasts. That's the issue.
Here's a tough chart for you. We talked about it the other day, and I think Triple D made a good call on it. Ulta Beauty, ULTA, had a good earnings report. Earnings pop into the gap. The gap is faded, but man, it's not giving it back. You know, it's not falling back into that gap area. Let's see what you have from yesterday. I'd say if you're trying to hold this one on the long side, pair of lows just under 249, 48.35 and 48.80 would be the support you want to see it hold. But Earnings pop and drop, trying to rally again. Any thoughts on Alta Beauty?
Well, this is, I don't model this. I model a lot of stocks. I don't model this, but I mean, this is basically kind of easily call this kind of one of these love bubble stocks at highs. So the problem is if a stock is way above where it probably should be, sometimes a 25 to a 35% drop isn't enough, meaning it doesn't take a stock that's exceedingly expensive and turn it into something that's cheap or a good buy. So then you get people wrestling around, the bulls and the bears wrestling. I don't know. It kind of looks like it's a tweener. It's probably going to go the way of earnings. So, the next 2 quarters are good. Maybe it comes back up into that 300 area. If the next 2 quarters aren't so hot, I don't know. Where's the low? Because once a hot growth stock goes bad, it's seldom that a 25 or 30% drop is all you have to deal with. It's like, remember Chipotle? I mean, Chipotle's come very good again, but I don't even know. That thing was 50% plus to the downside
for a long time. Yep.
Yep. So like I say, this is kind of just one of these stocks that I just have a hard time embracing now because it went up so much. I think it was basically a 30 to a 360 move. So, I don't know. You tell me where it should be trading.
I'll just short term, if you're trading this thing, I'm looking at, the pop up to roughly 270, the drop to 246. That was a 24-point move. So you're getting half of that back. Add 12 to that, 258. I say you get back above 258, hold 258, and you'll clear 260 and maybe test the high of the move. But I think it's important for it to get through 258 over the next couple sessions. At halfway of 50% retracement of the little pullback off that power high at 269.89. That was a big day. It closed the previous day at 36.02 and had the good earnings report. We'll see what Alta Beauty can do now. Let's see here. We are getting some stocks from Rob Hood, who thinks
Rob Hood.
I don't think that's his real name. Rambus looks like it's ramping up here. And
Rambus, that is a blast from the past. Let me look at, Rambus has had a good year. Rambus is, a memory play. It's an IP memory play. Obviously, it's probably riding the back of Micron and Western Digital of late. I don't know. I mean, this is still a cheap stock. I mean, it's doubled off of kind of crazy lows, and maybe it's more than doubled off crazy lows of a couple years ago. But it's it's still probably fundamentally very cheap. Probably trading a low multiple to book value. I don't. Here's the problem. You pull up a 5-year chart on this.
I was just going to go to a longer term chart on this, and I got a story. I got a story with this stock.
Fire away.
This is a good story. And I don't know if Triple D is listening. It's 2 minutes away from the open. But in 2010, January 2010, this stock, it had a flash crash like during the day. And I'm not sure what the exact.
It's weird. I don't really see it on that chart, but I believe you because that was the flash crash day.
That was a flash crash, right? It was 2010, correct?
Yeah.
And what happened? So Triple D, when he used to do more writing, he wrote an article, and this is in January 2010. He said, "What if the whole market went into a flash crash?" And because he was talking about market structure, and he put that article out. I don't know if it might be on Lock and Key with the CFA, but basically in January, he said what happened in Rambus. What happens if it happens in the entire market?
Hey, if you ask me what caused the next market crash, it's not going to be caused by something economic. It's going to be caused by the machines, market structure, lack of an uptick rule, all that stuff. So I agree. I'm not saying it's going to happen, but I think that is going to probably cause the next market crash.
All right. So
anyway, so Rambus was a flash crash victim, as many stocks were.
Yeah, but this happened in January, and he said, "Hey,
got it."
Big on his market structure, and he said, "Hey, what happens within the entire market?" And then I believe it was May 6th that you actually had the flash crash. So giving him a little credit. Maybe he'll dig that article up if he still hasn't put it out there. Which pretty
Yeah.
interesting. For me, for you Rambus players here, 1483, little peak there down to 1245, little over a 2-point move, getting back 50%. Let's knock out this seller. Where are we at? We're at 1382. There was a seller, man, looks like 14. This has got to get above 14. I see a lot of pesky highs here between 1383 and 1409. So that's what
You know what I'm gonna do? I don't think you and I are gonna be on again until January, right?
That's correct.
But before the next time I come back, I'm gonna actually model this. It's not one. I probably in my spreadsheet, my multiple spreadsheets, probably have something like 50 to 70 semiconductor names. I don't have this in there. I'll put it in there and see how it stacks up. You know, and I've been very bullish on cheap semis. You know, my calls on Qualcomm and MTSI and Micron when it was much lower. This is a cheap semi. I don't. The problem is I like semis that are going to grow or have a theme. Again, I liked MTSI because they're very levered to 5G. You know, I liked AMBA, especially when it was GIS. I still like AMBA. AMBA is one of the names I kind of feel like I should own more of. But you know, there's all sorts of theses that are going to drive their revenues higher. I got to dig into Rambus and kind of fit and kind of see where they fit, because I don't know if there's that much of a need for memory IP. And they may have even changed their business since I used to really know a lot about them, which was years ago. So I'll dig into it. I'll see how it stacks up versus other chip stocks that I think are cheap.
All right, S&P's climbing a little bit higher here, up 5.5. They just could not sell it off overnight. Let me see if I can bring up a little bit different chart here of what I'm looking at as far as the S&Ps go, and I'll blow this up a little bit. We matched yesterday's low at 92. You can see we hit that early in the morning. You had to be up early for that. Actually, that was at 3 o'clock in the morning. And then these two red lines here that you're coming up on, those are the highs in the last two sessions. The 24-hour session, the first red line from Monday comes in at 0250. The second red line comes in at 0350. So there's your target, and there's your key to more upside here in the S&Ps. The white line there is just the closing price, and the yellow line during the intraday 50% retracement. So that's what I'm looking at in the S&Ps going into the session. Sean, we got a question here about what's going on in Washington, and and that's impossible to predict.
Well, but it is and it isn't. Okay, so let's talk about impeachment. And by the way, I'm basically a lifelong GOP. Been a Republican for a long time. You know, never really been a huge Trump fan. I wanted Rubio to win. I have no problem putting that out there. But I always say, look, judge somebody from what they're doing. And I would say most of the decisions Trump has made from a political standpoint have been relatively good. I'd probably agree with about 85% of let's say the policy decisions he's done. Mm-hmm. Okay, the one you want to talk crazy town right now. Now I might make, but this is not a political statement, people. But if you get mad at me, I guess it's your emotions. But I think the Democratic impeachment of Trump is one of the silliest things I've ever seen in Washington. It's just silly. It's like, okay, so if we just inherently just don't like a guy and we have the majority, what are we going to start impeaching people now just because we don't like somebody? I mean, this is kind of beyond the scope of the ridiculousness of Washington. So that's basically what I think. Do I think Trump could articulate things better and cross the divide and build bridges and stuff? Sure, I do. But he's not. That's not him. That's not his personality. And again, I would urge everybody to basically look at the decisions that have been made on trade. Look at the decisions that have been made on things like reducing regulation, tax policy. I generally agree with most of that. Now, is Trump exceptional? Would almost any Republican have done something similar in office? I think so. I think he's basically governed pretty much in line with sort of a GOP slate, if you will, which to me, that's positive. So, but this impeachment thing, I think, is just lunacy. I don't think it's going to go. I mean, he may technically get a vote to impeach, but I don't think it's going to go.
It's not
anywhere.
going to happen. I mean, that's
no,
the way.
it's. But you know what I'm going to say too. So now the Dems might love me. The Republican impeachment of Clinton, which I do think there was probably more evidence of back then, I still thought that was equally stupid. So I think this is almost like we're taking a time machine and we're kind of revisiting or redoing the Clinton impeachment just because this is finally a payback or something.
Yeah.
I think both of them are dumb. I think both of them are dumb. Both are a waste of time. That's where I come down.
Okay. All right. Now that's it was asked about in the chat here, so don't like to.
Do I think it affects the market? Not much. I think the China news is more compelling. It's not much of a deal, but it's progress. I mean, that's going to be a story that kind of keeps going on into next year. Is China trade and all that kind of stuff.
Okay. All right. Just someone wanted your thoughts on that, so I thought I'd have you share them with us. We're getting it from DC1, BTI. I believe that's British tobacco. You want to take a think so?
I'll give that one to you.
Oh my God.
I don't really know much. I don't really follow much in the tobacco space.
What is this? This they just get. Yeah, I'll pass on this one.
Yeah.
Those gaps. Wow, let me see if I can get a daily chart on this.
I was gonna say must have had some kind of news.
No,
or something.
it just reacts. Are they in a deal with somebody?
I have no idea.
I don't know. This is a tough chart here.
That's a weird one, dude. Look, you know what this might be? It just could be super thin or something. Is this just?
It's an ADS, so whatever happens here, it's just reacting to what happened over there. So
that's a weird chart, though.
Yeah. All right. We'll pass on that one.
Sorry.
Pass. I passed on a chart the other day, and Dennis almost fell out of his chair. But this one's a tough one. I can't remember what the stock was, but not even an accordion chart in this one. S&P's creeping up there. 0150 is the current high. You got to think there'd be a few buy stops there at 02.5, 03.5, trying to pick the high of the move. That's the all-time high, but trading in the green. I see Apple in the red a little bit by 88 cents, kind of a mixed market. But let's go to one that we talked about a lot this morning. Everybody's talking about it a lot. Federal Express here, FDX. And I don't know. I heard the CFO was trying to make some comments that the bottom is in here. Big old range. This is on the 15-minute chart. Where'd you flush down to? 147.90. You flush down to. I think the longer this takes to get back above 150, the more you're going to see on the downside on this one. Little pop off the open, but that's being faded as we speak. I was looking at the dailies on this one, and it's kind of scary. The daily support here came real quickly off this area. So two daily levels to keep an eye on. 147.18. How low did we get here? We got to 147.90. So that's still in play. And then under that 147.19, 144.39. Your next couple lows, and then the lows of the move here. So, I mean, they're cutting earnings. I mean, we talked about it makes a lot of money, but if they keep cutting earnings like that, it's going to dwindle. Any thought on Federal Express?
Well, I mean, what we were just talking about Alta. So, if you pull up a long-term chart of Alta, you pull up a long-term chart of FDX, they kind of have some similarities. Once a stock has been down long enough, and once it kind of shows you a range and shows you support, I mean, this one might kind of come into my purview, I would say maybe in another 3 to 6 months. By the way, if you look at the chart, it's kind of got a sneaky inverse head and shoulders pattern. You see the October low, then you see the left shoulder's been met, in fact, like 3 times.
Yeah, I see it. Yep.
Yeah, now you're forming a right shoulder. I mean, the thing is, they basically strategically said, we're not going to be beholden to Amazon. We're not going to let Amazon crush our margins permanently. Now, they're kind of suffering because of that. They've obviously lost revenues. They probably have my guess is their margins will probably improve off lower volumes in the next few quarters. This is a tough one though. Again, this is when stocks go like, should FedEx have gone from 75 to 275? I think that's the 5-year range or something. But you know, so in other words, were people paying a rational price for this thing at highs? I'm talking 5-year highs. So, oh, there you go. Okay, yeah. Okay, so well, let's go more from 2013. This was 80. Yeah, it added 200 points, right? So that's the problem. The problem is if you're a buyer of FedEx at 260, unless you got a tight stop, you're suffering because you bought a stock way too high. So I don't know. I mean, I think it's starting to look more attractive. I don't know if this thing, like something like a DICOM, DY, they do construction. It's a 5G play. It's been down a long time. They've had a couple good reports recently, but the stock is probably down kind of seasonally. There's some tax loss selling. To me, something like this sets up better. Okay. But by the way, it's kind of a similar chart. So I would say I'm kind of neutral to maybe interested in FedEx. It's kind of taken the pain. The question is it taken enough? Sometimes you just don't know. And you don't know until something starts climbing the wall again. So FedEx will be easy. If it, put it this way, if it holds that right shoulder, this thing could get pretty interesting. And you get a trend line break, it holds right shoulder, but I mean, look at that 16 to 18 move. That's just a huge move. So those things become tough. Crowded longs become really tough trades to put a bottom in. This was a crowded long.
Yeah, definitely. Try to get back over 150. We'll see if that early morning low holds in the 147 handle. What stock was it?
By the way, what's interesting? Sorry to interrupt you, but look at the pattern which it bottomed off 016 or 2000. That was an inverse head and shoulders there. So I would bet a lot of times stocks rhyme over time. I bet if we went back and looked at another bottom like in prior years, they get tougher to see the older they are because you can't get a daily chart on it. But yeah, I mean, I don't know. Maybe this thing tends to bottom once it puts in an inverse head and shoulders pattern. It's got the makings of one right now. It's too early to call it though.
All right, let's go to another chip stock here for you to take a look at Xilinx.
Xilinx, yeah.
Yeah, I got an extra letter.
Yeah, another one. I mean, this was a recommended short of mine earlier this year. Thing went down, $40 almost instantly once it decided to go down instead of going up every day. I still don't really like this stock. It is a 5G stock. There is a price I probably would like it. It was an undeservedly cheap stock at probably 35 to 45 or 50. So it definitely deserved a big chunk of this move, but 140 was crazy town. I don't know. I'm kind of neutral on it. Again, there's other names I like better, but I wouldn't short it here. That's where I am on Xilinx now. I don't think it's a good short. It's kind of like a 50-50 play. Yeah, it's trying to build a base
here. This one,
it's trying to build a base.
Yeah, it's building a base, but it also has a roof too, and it's just under 100. So it's like one of these stocks where, like, show me.
I agree.
Get over 100 and hold 100. Because it just could be rattling now just off lack of sellers, right?
Or fill that gap, right? Yeah. Fill that gap up to like 104 or whatever that is, and then. I mean, here's the thing. They probably got they benefited greatly from a bunch of over ordering from Huawei. That's done. The China double, triple ordering is over. That's what's caused the recent decline. They're basically baking in very little China business or very little Huawei business now. So what they get would kind of be bonus dollars. So the comps are still tough, but I would say in like 2 quarters, comps start getting pretty good for this guy, for Xilinx. But this is gonna be this company definitely has potential to get hot again because it's one of the building blocks for very important 5G technology. So Cadence is another one. That's CDNS. Again, we've talked about Qualcomm. We've talked about MTSI. I generally like the 5G levered plays as long as they're not way too expensive. And there's like Avago would be one that's way too expensive. Skyworks is probably overshot a little bit. Qorvo, that's QRVO, is another one that's gone kind of haywire to the upside. I like Qorvo earlier this year. Wouldn't want to buy it now.
Correct.
Anyway, so you know, but hey, I'd favor Xilinx over Qorvo now. Like that's a pretty easy call. I just, you know, I'm stingy, man. I'm stingy on my buys. Like I like to buy stuff that's very attractive. Xilinx is you know, if you have a 3-year time frame, it's probably going to do fine. I don't know. I don't want to eat 20 points though. Like 75, I think it would set up very, very nicely if it were to get there. If it doesn't get there, I don't know if I need it.
Okay. All right. Let's just take a look at another story stock here.
I do love this space though. 5G semis is going to be something for the gift that keeps giving. Oh, Boeing.
Yeah.
Look at how it won't break.
I know. We talked about that 320 level yesterday. It held. It's in the green today. I mean, that's about as bad news as you can get for the stock, right? I mean, aside from like cutting the dividend or, you know, massive layoffs or anything, that news that came down yesterday, that's about as bad as it gets. And I know it was down big on the session, but the way we interpreted the price action was positive. The way it held that 320 area. And what I talked about on the show today was, you know, last 2 times it bolted out, it, you know, got down to this area and really bolted out quickly. And that's what I was looking for today. It is trading in the green here by 371, getting helped out a little bit per overall market. Nothing done if you're trying to sell that all-time high, folks, at 3203.50. I was hoping to get that to exit along, but it looks like I might have to do it on a decliner here. I'm hoping they'd at least test that on the 3rd time, but tapering off here now. I don't know. You want to call it a triple top if you want, but there you go. 3202, 3202.50, and 3203.50 are your last 3 highs. I'm not sure if you have any economic data coming out here or not, but we are tailing off after not making that high. So here we are, folks. We're still green on the session. Quiet range yesterday. Let's see let me go to the YouTube chat here to see if they popped anything in recently. Are you seeing any news here? I mean, I don't want to be like a worry ward here or anything, but that was a nice little pullback off the high. Let's go to a shorter term chart.
I think that there's just, you know, this is we're seeing what's pretty typical end of year, volumes get thin. Well, here, you know, one thing that is interesting, you know, we talked about this at least 1 time, if not 2 times. So, you know, in recent years, stocks have kind of tended to sell off all the way to the end of the year. In other words, the January effect actually does occur in the next year versus the traditional January effect, which people start buying the cheap stocks. It used to be November to early December they would start. And I, you know, we talked about this and this is definitely a more normal January effect this year. Lots of cheap stocks are kind of seeing some bids, some expensive stocks are getting sold. And in fact, there's been some big moves. I mean, there's some of these beaten up stocks. I've seen some really big moves off of recent lows. So, you know, that there's probably some rotational action at play, but yeah, thin conditions, you can get some pretty fast moves. That's my guess. And maybe the impeachment vote's coming up. You know, that's probably going to. Yeah. Isn't that good for 5 to 10 S&P points or something like that over a 10-minute period?
Who knows with this? For the downside, we hit 30. What do we have? I've got a good number on the downside for you too. Tuesday's low was 31.92. We matched that in the this morning session, and the intraday low from Monday. That's your 9:30 to 4:15 low. That came in at 31.95 31.9175. So not really looking for any considerable downside here until you take out 31.92. So tight range here and trading in the middle of the range, that little pullback here. All-time closing high, in order to improve on that, that was made on Monday at 31.9850. And that's the area that we're trading in right now as well. When you talked about your Apple short, did you do it? Did you do a outright short stock, or did you do a spread, or how did you approach it?
I did put spreads, and
You like to do
the
put
reason
spreads.
I do, you know why I like to use put, especially shorts or hedges, is because one, when a stock finally gives up and drops a lot, or it drops quite a bit. So it might not even be a huge percentage point, but you know, like when Apple finally gives way and goes down, it'll probably go down 10, 20 points. And as you know, when you're working a spread, so let's say if you got a 20-point spread, hey, if the thing drops 15 points and is only 4 or 5 points from the max of your spread, you get paid really, really well on those. So let's say you pay $250 or $3 for a spread, you know, and the thing nets you, you know, it goes to 15, it nets you 14 points. That's 7-bagger, right? So again, you're going to miss on a lot of those. A lot of these are going to expire worthless, but at least you have protection, and the protection doesn't cost you a ton of money. That's what I like about them.
Could you get, for those 20 and 25-point spreads, aren't they making you pay like $5, $6 on those?
Nah, well, sometimes you know, a lot of it depends on the opportunity set. I'd have to go look at my.
No, I'm curious, because I've looked at those too, and it's like,
yeah.
You know, I mean, the risk reward's good, but that's expensive spread. But the other thing about what you're talking about is it's probably easier to hold on to the position, because if it doesn't go your way right away, at least you're getting a decay on one end of the trade. You're giving it
exactly.
up. You're obviously giving up the decay on the higher strike put price and lower strike put. I mean, it helps. It helps.
It's a net. I mean, put it this way. Here's the way I look at it. Now, the only time you don't like it is when if something really weird, I'm not saying Apple's going to go to 160 or anything.
No, I understand.
That would be a ridiculous statement. But even a move back to 220, which formerly was like an all-time high, would be a big move, very short term. But the only time you don't like the spread is when it goes way beyond your spread point, right?
Yeah.
Where stocks like Apple, I think something pretty monumental would have to happen for this thing to drop 20 points short term. Right.
For sure.
So I'm pretty comfortable with the 20-point spread on it right now.
Okay. Someone's asking about APHA, Afria.
I don't know that one. Biotech?
Pot.
Ah.
I did. When that CGC was rallying, I did play this one a little bit, and I mean, it got up to 550. I was worried about the pair of highs that it had at 562 and 570. And it got to 555 one day and 561 one day. So I was able to sneak out of it for a small profit. Now back down at the $5 area. I don't know, man. These stocks are just
they're tough. But I mean, they fall into this. I mean, I'm going to be long a couple of them, and it might only be a 4-day trade, or it might only be a 2-day trade. But I'm literally going to buy these. Probably I think December 31st is a trading day, right? So I might buy a couple of these on December 31st, just to give it a go. I mean, CGC has already worked a little bit. I've traded that a couple times, but I'm talking things like this name, Tilray, PYX. PYX had a 20% day the other day, by the way.
What did it go from 10 to 1020?
No, it went from 6 to 720 or something. But I mean, this thing could wait. These are specs, right? Spec trades are spec trades. So it is what it is. But maybe we've kind of gotten to a point. I mean, you remember me? I was probably the biggest bear of all bears on pot at one point, right? I wouldn't short the names here. I wouldn't short pot stocks. I'm starting to consider them as at least trading longs. I don't think they're investment longs, but they might be. I mean, I put it this way: the stocks have been tortured enough and dropped enough that they might have
Pop, yeah.
some value. Yeah, some pop potential.
Let's just we got just a few more minutes here left. And we're getting Marsh Murray is asking about two stocks, totally different sectors. We talked oil, talk Apache, and nice rally here.
That's one. Apache's one of my small longs. I like it. I like Apache. I like Devon better probably, but I like Apache. That chart's kind of encouraging. It's not out of the woods, but it's kind of encouraging.
Yeah, filled the gap there. I think it's important. I mean, it's got a lot of retracements to do here.
Oh man, I mean, but this, I mean, if you get oil, I think oil might only be about $5 to $8 away from a price where a lot of these. Wow, look at Oxy. That's probably a really good buy, by the way. That's a high quality name.
But that's who did they buy? That you should know this. They bought
I should too.
Come on, Chad, help us out. Who did they buy?
Maybe that's part of why they've dropped as much.
Oh yeah, they got absolutely. I think when it was around 55 when they bought that, and
you know what? I'm glad you pulled that up. I'm going to look at this. I'm going to look at this today. Yeah.
Them and Chevron were going after somebody, and
maybe they overpaid. Maybe they overpaid for something.
Thinking.
Yeah.
And I think Icon might be in this one too. Yeah.
Well, everybody likes to think everything he does is perfect, but he's like all of us. We all get stinkers, man. And he's had a lot of big positions, I believe, in the energy patch that have treated him pretty poorly over the last few years.
Yeah.
Isn't he big in FCX or
it was
something like that?
What's that?
Anadarko.
Oh yeah. Boy, oh boy.
And Chevron. They did buy it. Oxy beat Chevron out for it.
Spencer, you still there? What are you seeing on your radar, Spencer? Anything you wanna?
I'm still here. I'm just hanging out in the background.
Yeah.
Well, give us the scoop, buddy.
Yeah. What's the scoop off the news desk, Spencer?
Were you guys watching the gaming stocks at all today? There was some news in Macau, and Win and LVS, MGM, the whole bunch were trading up in the pre-market.
Yeah.
Not so much after the open, but there was President Xi Jinping is visiting Macau, and I think they increased the remittance limit for people in Macau. So it was trading up on that headline this morning, but since giving a lot of gains back. I mean, looking at LVS here, giving a lot of the gains back.
Yeah. I did not see that news though. Thank you. Thank you for pointing that out to us.
By the way, those stocks were all massively hated stocks 2-3 years ago. They've all done very, very well in recent years.
FDX here, Federal Express.
Are you sniffing a trade here, Joel? No, it seems like you're sniffing a trade here.
No, it wouldn't be on the long side. I'll tell you that. Anything picking it. I mean, maybe if this gets down to 144 today here, but boy, oh boy, not much of a pop in that 150 area is getting farther away. All right, Sean, any final thoughts here?
I was just going to ask you what your theme for the year is next year.
My theme for the year next year is to take the sell button and puts off like my computer, and it's just sticking. I mean, I'm primarily in ETFs that represent the broad market, the S&P, a little bit higher dividend ones. So not really any year-end adjustments. Never really tried to hedge the long-term stuff because it really doesn't do any good, right? You get these declines. So no,
a lot of times,
yeah. I mean, I still try and grind out. I know the market's gonna have a much better gain than my overall portfolio, but if you can grind out 4, 5, 6% a year, I'm happy. Probably a little bit better this year, and then on the down years, where you had the big declines. I'm not gonna, if we'll ever have one again here. don't get hurt as bad that way. So, and always having cash to deploy if things look good. Don't really have a stock of the year to, talk about. You and I always go back to Twitter, and that showing some signs of life here, the big gap down, finding a lot of support here. So if there's something that may
I think Twitter could be kind of sneaky again. I mean,
Yep.
Here's the funny thing about Twitter. It probably hasn't fulfilled the promise you and I had hoped for it from a long-term growth potential. But
Yep.
again, tripled off lows. I mean, even earlier this year, it was a 30 to a 45 move. That's a 50% move. So the question is, hey, we have to be good enough to take those trades when we get them and trim it. And put it this way, I would be shocked if Twitter's not $45 at some point again next year. That would be a huge surprise. So I think it's pretty decent setup, at least for a long-term swing, I guess you'd call it.
Okay. All right. We're going to wrap things up here. S&Ps are still in the green by $1.25, by $1 at 31.9650. Triple top for now. So if you're so inclined to risk 10, not even 10 points, 6-7 points on an all-time high, or a temporary high being in, that's your level. Tested it 3 days in a row. Today's Wednesday. You have a quad witch on Friday. People don't do much with the single stock options, but could provide for a little bit of fireworks on Friday. Sean will be off for the next 2 Wednesdays, and we'll have to talk about set a plan here and see what we're going to do in the new year. But
see you in the new year. Enjoy your holidays.
Okay. All right. Thank you. And
you bet. Always good to be on.
Talk to you soon.
Thanks. Bye.